Hello, very good morning to all, and I hope that you all have a good and restful weekend. Very good morning, I'm Kelvin here. Welcome to today's Daily Dose of Market Insights, and welcome to a brand new trading week. Today will be Monday, the 19th of May, 2025. So as usual, before we kickstart our Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right. Okay, so as usual, let's have a recap what has taken shape on last Friday, over the weekend, and as well as this morning in terms of the news flow, economic data release, and their impact on the broad-based cross asset classes. So let's start with a review of the US stock market first on last Friday, and as well as its respective key economic data events, the economic data events that has taken shape on last Friday. Okay, so if you could see that on last Friday, all the major four US indices closed in the green and continues to rally very strongly at by the close of the US session on last Friday, which is i.e. 16th of May. So the S&P managed to gain 0.7%, the Nasdaq 0.4%, the Dow Jones managed to outperform at 0.78% marginally, slightly above the S&P 500, and as well as a 0.3 percentage point more than the Nasdaq 100. The Russell 2000 also outperformed by 0.89%. And the reason of this strong outperformance was also this ongoing US China trade de-escalation that has this positive feedback loop into the price section of the major US stock indices, which I have highlighted since the start of last week. And by the time when the US stock market closes at 4 a.m. Singapore time on last Friday, that means Saturday 4 a.m. Singapore time, there was this negative news flow that came out of the US, which one of the leading global credit agency, which is Moody Ratings. So Moody Ratings has downgraded a US sovereign debt, which is the US sovereign credit rating score, from AA1 from AAA. So AAA is actually the highest rating in terms of this international credit rating standards over here. So the reason why Moody's Ratings downgraded US sovereign credit rate score is due to the blooming debt and deficits that will damage US standing as a global capital destination, and eventually it may increase long-term borrowing costs of the US. All right, so that particular, give me a minute now, sorry. Okay, that particular downgrade for Moody's on last Friday created a negative feedback loop into today's opening Asia session. So if you look at today's opening Asia session, both the E-mini and the Nasdaq 100 actually declined by negative 0.8% to negative 1.11%. So if you look at the charts of the Nasdaq, okay, give me a minute. E-mini, this is the S&P 500 E-mini futures. Okay, this is the start of the Asia session today. It actually opened down on a weaker footing, very similar on the Nasdaq 100 E-mini as well. Okay, open on a weaker footing in today's Asia session. All right, due to the negative feedback loop triggered by the Moody's Ratings downgrade of US sovereign credit, and this downgrade of sovereign credit also lead to a sell-off in the US dollar as well. So if you look at the US dollar as we are speaking right now over here, okay, one second, let me open up the chart. Yeah, this is the euro. Okay, so this is the 5-day rolling performance of the US dollar against the major currency as of now we are speaking. So we see a continuation of this dollar weakness, and the dollar weakness is pretty much apparent in the dollar yen. over here. All right, so there's actually, if you look at it over here, there's a steep sell-off in the dollar yen upon the release of that news flow from Moody's rating that downgraded US sovereign credit score. Okay, so this is exactly at 4:35 a.m. Singapore time on early Saturday. That means after the close of last Friday US session. So there's a big plunge on the dollar yen over here, and the dollar yen continues to remain weak on a 5-day rolling performance basis, and is the weakest among the major US. That means the dollar is the weakest against the yen, as seen in other major currency. Down, the dollar yen is down negative 2.2% as of 19th of May. We are speaking right now based on the 5-day rolling performance basis. And what's interesting over here is that we now start to see a revival in gold as well. So if you look at the gold price over here on the daily time frame chart, let me very quickly switch to the gold price. Okay, this is the 4-hour chart. Let me put it on the daily time frame. Let me remove this. Okay. Let me put it a different color. Okay, so if you look at gold price over here, on both on Thursday and Friday, it managed to stage a bounce right exactly at the 50-day moving average. Okay, acting as an intermediate resist support level at around the 3,130 level, which is our short-term pivotal support level that I highlighted on Thursday and Friday, where we flip to a intraday trend bullish bias, uh, anticipating that corrective decline from the current all-time high of 22nd of April may have hit a inflection point where potentially there could be a sign of bullish reversal coming back into gold. And it seems to us that, one second, let me change the chart. Okay, let me hopefully I can change the color of this chart back to the black and white candlestick. Okay, so while you're waiting for the pop-up to appear, so okay, good, finally it's up. Okay, so given this potential signs of a bullish reversal reinforced by events that are supportive of gold, number one, we start to see a weaker US dollar triggered off by this so-called the Moody's ratings credit downgrade on US sovereign credit score, and as well as the US major stock indices futures doing a bit of profit taking at the start of today's Asia session. That means we may start to see that sell America team play coming back into the forefront again, potentially, and that could lead to a potential bullish reversal in gold after that corrective decline that takes shape since the current all-time high of 22nd of April. And also, gold also tends to benefit in terms of the particular fundamental environment, which is stagflation. All right, and the risk of stagflation continues to rise. So on last Friday, I shared with you all that this market transacted instrument, which is TIPS, the US Treasury Inflation Protection. Very quickly, let me share with you what is it again over here. Okay, so this is the 5-year break-even inflation rate, which is in dark blue, and the 10-year break-even inflation rate in light blue. So this break-even inflation rate is actually market transacted implied inflation expectation stretching into the future 5 years from now and 10 years from now, and this has been slowly rising, indicating that market participants in the US Treasury inflation protection securities market has been keep on pricing a firming up of stagflation risk in the US economy. And on last Friday, there's another tier 1 economic data that supports this firming up of, or I don't say firming up, I put away that there is this lingering risk that stagflation is maybe still around, may hit the US economy by looking at this tier 1 University of Michigan consumer sentiment data over here. Okay, let me share with you a bit. Okay, so on last Friday, the Michigan consumer sentiment data, this is a flash data for the month of May, because we know that May has ended, so they tend to actually release it around the middle of May to have a preliminary feel on the on the consumer sentiment gauge of US consumer. So the Michigan consumer sentiment flash data for May actually came in way below expectation, 50.8. So that was much worse than the previous month of April at 52.2, and what market is expecting is 53.4. So it's way below. And the actual print that came out is actually the lowest reading since June 2022. Okay, and the second lowest reading on record over here. So what we could see, if you put it in a 10-year basis, right, it's actually very clearly staging a major downtrend phase in terms of US consumer sentiment as compiled by the University of Michigan. So what it means that over here is that if consumer sentiments to be rather weak on the persistence trend on the downside over here, as you can see on the trend that is appearing on your screen, it also implies that future consumer spending will be very bleak and weak. And we know that consumer spending is the forefront of forms a we call it a critical component of US services activity. US services activity contributes to 3/4 of US economic growth. So what it actually implies that there is a growing risk or rising risk that there will be a potential economic slowdown in the second half of this year. And we know that economic slowdown tends to comes with deflation. That means a weakening on prices because there are lesser demand. So lesser demand will lead to a slowdown in inflationary trend, or worse still, they go into deflation. But however, this time around, inflationary trend is not coming down, instead it's picking up. So this is what I call stagflation risk. That means very dangerous concoction of economic forces, slowdown in growth followed by a rise in inflation expectation. And how do we know that that is a rising risk? Because we in the University of Michigan consumer sentiment data, there's actually a subcomponent where University of Michigan also poll the respective correspondents what is their future inflation expectation will be 5 years from now and 1 year from now. So from the 5-year inflation expectation, that also jump up by a tremendous amount from 4.4% to 4.6%, and the 1-year inflation year look ahead rose much more significantly to 7.3% from 6.5%. So if you look at the trend, all right, so this is the trend over here. So this 1-year inflation expectation. So this is, it continues to accelerate for the 6th consecutive month to 7.3% in May, reaching a new high since November 1981. All right, so if you look at the 10-year, you very clearly in the is in the circular uptrending phase for the 1-year inflation expectation as compiled by University of Michigan. And if you look at the 5-year inflation expectation, where is it? This is the 1-year, this consumer sentiment. All right, pardon me, let me put it up here. I didn't open up the screen. To give it a couple of seconds to load it up. All right, so the 5-year inflation expectation rose to the steepest level since March 1991, right, at this 4.6. So if you look at the 10-year trend, very clearly is in a circular uptrend phase as well. So what I could see over here is that based on the latest University of Michigan survey on consumer sentiment, and as well as polling consumer view on their future inflation expectation going forward from 1 year from now and 5 years from now, is indicate to us there are rising risks of stagflation over here, right? So with that, despite we have that ongoing so-called US-China trade de-escalation optimism that is still playing out in the major US stock indices from a medium-term perspective, but on certain aspect of the market doesn't buy this US-China trade tension optimism, de-escalation optimism may last, right? People are now hedging accordingly based on their risk preference, and that has been evident in the price action of gold XAU/USD that managed to find support last week at its rising 50-day moving average. All right, let me right over here. Right, and in today's Asia session, it managed to inch higher at 0.75% as we are speaking. All right, so that means, i.e., two things we got to bear in mind over here. Number one, from a fundamental perspective, stagflation risk in US is still pretty much alive, as I shared with you all on the University of Michigan latest consumer sentiment survey, also evidenced by market transacted break-even rates. And secondly, we now start to see gold XAU/USD being used as a hedging asset, founding support at a rising 50-day moving average, indicating that gold market doesn't seem to have a full faith in this ongoing China-US trade tension de-escalation optimism that still has a persistent positive feedback loop, at least from a medium-term time frame in the major US stock indices. All right, so right now that covers the first segment of today's daily dose. Okay, one more segment, one more news flow I want to highlight is that over on Friday, actually Trump mentioned that he will actually set tariff rates for other nations in a couple of weeks. So what does it mean over here is that we know that in middle of April, he gave a 90-day pause on the higher reciprocal tariff rates. That means all countries are being hit by the base 10%. All right. So right now, there's a lot of countries rushing to negotiate deals with the US. Right. The major one that we got to take note of will be still in the process will be EU, South Korea, Japan, and India. Right, so China has already done with a pause, 90-day pause, to reduce their base tariff rates from to 30%. Then on the China side, they will reduce 10% for US products heading into China. But what's interesting over here, Trump mentioned that for other trading partners over here, he will set tariff rates, all right, accordingly with other US trading partners over the next 2 to 3 weeks due to the lack of capacity to negotiate deals with all partners over here. And from there, the Treasury Secretary and Commerce Secretary will send letters to countries informing them that the tariffs they will pay to do business in the US with an appeal process available. That means, i.e., for countries that are not in the able to actually get a one-on-one negotiation deal being tabled with the US administration, they may be likely to be hit by higher trade tariffs at the first instance, but open the door for an appeal process. So that also potentially could actually see higher inflation expectation hitting back into the US economy, because we know that trade tariffs negotiation takes a very long time a process, and right now Trump has really admitted that there will be lack of capacity to negotiate one-on-one deals. So there's a big risk that after the 90 days has passed, that means in July, we could start to see higher tariffs being come into place in the global economy. Something to take note of over here. All right, so that's end the first segment of today's daily dose. Let me touch on the second segment of today's daily dose, which is the intraday technical outlook on those broad-based cross asset classes, starting with the FX market. Right, let me expand my screen. All right, so I hope that the screen is moving. Okay, so let us start with the euro dollar. Right, so on the euro dollar perspective, on last Friday we flipped to a neutrality stance as the euro dollar can't break out of this upper limit of the range of 1.28 1.1330, and indeed it's tried to actually trade sideways again on last Friday. And last Friday at the start of the US session, or the first half of the US session, it managed to dip towards the lower end of the neutrality range, which is 111 figure, also correspond to the 50-day moving average, then before staging a bounce, all right, and traded marginally higher at the start of today's Asia session. Right now it's up 0.17%. So with that, no change, we still maintaining that neutrality stance in today's European and US session, neutral between 1.1280/1330, and the lower limit will be at 1.11 figure level, unless you have a clear breakout above 1.1330, which is so very close to the 20-day. Okay, maybe let me adjust it. Sorry, it should be 1.28, because the 20-day moving average right now is coming very close to 1.1280. Okay, let me adjust this. Let me adjust the upper limit of the neutrality range to be much more precise for today. Okay, Give me a couple of seconds for it to the edit button to actually come good. Okay, so let me adjust it accordingly. Okay, so 1.1280 will be my upper limit of today's neutrality range because it's of the 20-day moving average that is moving downwards, coming close to the 1.1280. Lower limit will be 1.11 unless we have an hourly bullish breakout above an hourly close above 1.1280. Then I could validate a intraday trend bullish bias on the euro dollar for the next intermediate resistance to come in at 1.1425. Right, so that's for the euro dollar. Next up will be the sterling dollar over here. So the sterling dollar continues to trade also in a very tight sideways range between our first support and the first intermediate resistance, which is met on last Friday, or even in today's Asia session, it managed to see a retest before a slight minor dip at 133.20. So I don't want to tighten my short-term pivotal support to be so tight at the first support level that we highlighted on last Friday, which is 132.55. So I'll still maintain at 132 figure level, short-term pivotal support level for today, still maintain the intraday trend bullish bias, unless at the start of the European session, we could have an hourly close above 133.20, then I will tighten my short-term pivotal support to 132.55 for the next intermediate resistance to come in at 134.20. However, a sudden reversal on the downside and the hourly close and a breakdown below 132 figure short-term pivotal support that would invalidate today's intraday trend bullish bias to see a slight dip down towards 131.20, which is the rising 50-day moving average as well. Only a breakdown below 131.20 may see the second leg of another round of corrective decline sequence unfolding, exposing the next intermediate support at 130.50. So i.e. overall, still watching 132.55 and 132 figure level, which is my short-term pivotal support for now, and maintaining that intraday trend bullish bias on the sterling dollar. Right, next up will be the Asia Pacific currency against the dollar, starting with the Aussie dollar. And we know that Aussie dollar tomorrow, we have a RBA meeting over here. So RBA likely will anticipated to be cut by 25 basis points. We'll touch up more about that tomorrow. So managed to survive the 64 pivotal support level and trying to trade the very tight sideways range again. So no change, 64 figure level will be my short-term pivotal support level, maintaining that intraday trend bullish bias within a tight sideways range configuration. First resistance level to watch will be the 200-day moving average at 64.60. A breakout above 64.60 may expose the next intermediate resistance at 65.15, which is the minor swing high area of 7th of May. However, if we start to see a bearish breakdown with hourly close below 64 figure level, that would invalidate today's intraday trend bullish bias to see a dip down towards the lower limit of that sideways range configuration that is still in place since the low of 16th of April, which is at 63.60/63.30, with also confluence with the 50-day moving average. So i.e. still watching that 64 figure level, which is my short-term pivotal support for today, to maintain a intraday trend bullish bias within a sideways range configuration on the Aussie dollar. Lastly will be the dollar yen over here. Okay, so the dollar yen came down, hit the first support during the start of the European session, stage a bounce. The bounce can't break above our pivotal resistance that we highlighted on last Friday, where we have a bearish bias 146.20, and also the 50-day moving average before staging that bearish reaction and retest our first support level at 144.95. All right, so in today's Asia session, the RSI also continues to remain rather on a weak footing over here, as is right now staging a bearish reaction of a former parallel ascending trend line support now turns into a pullback resistance, indicating that downside momentum still remains intact, at least on a short-term intraday basis. So for sure, no change because price action hasn't broken below our first support at 144.95. So no tightening of the short-term pivotal resistance. So still remains as the same level as of last Friday, which is 146.20. Breakdown below 144.95 exposes the next near-term support level at 144.10, which is the 20-day moving average. acting as a support level as well. However, if you start to see an hourly close and a breakdown below 14410, that means that would kind of increase the odds of another round of impulsive downward sequence, exposing the next near-term support level at 14290/35. That means, i.e., a breakdown below the 20-day moving average, which is at the 14410 support level, indicate that the rebound from 22nd of April all the way up to 13th of May is a corrective rebound sequence, not the start of a medium-term bullish reversal, and the price action of the trend may resume its medium-term bearish trend. So what do I mean by that? If we go to the daily chart, you'll be able to see very clearly. So on the daily chart, that bullish reversal, that bullish Marubozu candlestick trigger off on 12th of May, Monday, reinforced by the optimism for that US-China trade tension de-escalation may be a failure bullish breakout. We call it Hick fit. And price action in the last two sessions managed to reintegrate back below the medium-term descending trend line that I drew from the high of 10th of January. So with a breakdown of the 14410 level, which is also the trend line, ascending trend line that I drew from the low of 22nd of April, bearish breakdown below it, as preferably with a daily close below 14410, that would indicate that the entire rally from 22nd of April all the way up to 12th of May is a corrective rebound sequence within a medium-term downtrend phase that is still intact since the high of 10th of January. Okay, so this is what I mean on the dollar yen. Right. So with that, let's sum up the intraday technical outlook on the FX market. So let us focus our attention now to the major stock indices, starting with the Hong Kong 33. So still recall the Hong Kong 33 on last Friday, we flipped back to a bullish buyer stance. Why? Because price action is coming very close to a support level, which is pretty much key to maintain this short-term uptrend phase that is still intact from the low of 16th of April, as price action continues to trade within this minor ascending channel. And what's interesting over here is that price action managed to hit the lower limit of that minor ascending channel, which is 22,970, and managed to stage a bounce as we are speaking right now. And the hourly RSI also starts to reverse up from hitting its oversold region as well. All right. So with that, we will still maintain our intraday trend bullish bias as of Friday. I do not want to tighten the short-term pivotal support to be so tight at 22,970, because price action still can't surpass above the gap down on today's Asia session over here. All right, so there's a gap down over here. It still can't surpass above it. So I will still use 22,680 just in case of any whipsaw as my short-term pivotal support for today. Still maintain that intraday trend bullish bias for Hong Kong 33. First resistance level to watch 23,740. Okay, maybe let me do something over here. There's this level here. Let me have a much more conservative first resistance level to watch. Okay, so first resistance will be at 23,475. Okay, let me put it in writing. Okay, give me a couple of minutes. Okay. Okay, give me a couple of minutes. I don't know why it's not picking up. Okay, good. 23,475. All right. So using this level here, okay, so 22,680 short-term pivotal support level close to the 50-day moving average. Maintain our intraday trend bullish bias for the Hong Kong 33 that is representing the Hang Seng Index. First resistance level to watch for today, 23,475. Above it may see the retest of 23,740, which is the minor swing high of 14th of May, and as well as close to 12th of May. However, only a bearish breakdown below 22,680 that would invalidate today's intraday trend bullish bias to see a slide to retest the 20-day moving average that is acting as a similar graphical support level at 22,380. Right, so that's for the Hong Kong 33. Next up will be the Japan 225. So the Japan 225 managed to have the bearish reaction as expected at the 200-day moving average, which is our short-term pivotal resistance level that we have on last Friday, 37,925. So still no change, still using 32,925 as my short-term pivotal resistance level for this minor corrective decline phase to play out on the Japan 225. First support to watch, 37,280, a breakdown below it exposes 36,630, which correspond to the rising 20-day moving average as well. Only a bullish breakout and an hourly close above 37,925 that would invalidate today's intraday trend bearish bias to kickstart another round of impulsive upmove sequence. In first step, revisiting 38,460 followed by 38,850 next. Onwards next will be the Germany 30 that's representing the German DAX. So the German DAX managed to inch up higher and printed a fresh all-time high on last Friday at 32,902. So with that strong pushment up on last Friday, also slightly above our neutrality stance upper limit that we have on last Friday, we will flip now to a intraday trend bullish bias on the Germany 30 using a last Thursday swing low that correspond to the swing low on Monday, 12th of May over here as my short-term pivotal support, which is 23,380. So as long as any minor dip that may take shape during the start of the European session that does not surpass below 23,380 short-term pivotal support that we have for today, we will flip to a intraday trend bullish bias stance for the Germany 30. Next resistance level to watch will be 24,170 / 24,190. Above it sees 24,440 / 24,560, which correspond to a bunch of Fibo extension clustering levels. However, a breakdown and an hourly close below 23,380 that would invalidate today's intraday trend bullish bias to kickstart another round of minor corrective decline sequence unfolding, exposing the next near-term support level at 23,060, followed by 22,685, which correspond pretty much closely to the rising 20-day moving average. Next up will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30 managed to shape a higher high above the 200-day moving average, and right now it has time to slip downwards again due to the fact of that negative spillover impact for Moody's rating downgrade on US sovereign debt itself. So no change given that the price, the key support level still remains at 41,770. So now price action has really exited from the overbought level, and there could be risk that during the start of the European session, there could be some signs of a minor pullback taking shape. All right, over here, so pullback support level over here, this former congestion area here, 42,120, maximum 41,770. So that will be my key pivotal support level to watch to maintain our intraday trend bullish bias on the US Wall Street 30. Next intermediate resistance level will be 43,085, which is a 1.236 Fibo extension taken from the low of 7th of April, and graphically the minor swing high area of 5th of March and 6th of March. However, if price action continues to slide and have an hourly close and a breakdown below 41,770, that would invalidate today's intraday trend bullish bias to kickstart another round of minor corrective decline sequence unfolding, exposing the next near-term support level at 41,350 / 41,135, which correspond very closely to the 50-day moving average and also slightly below the 20-day moving average as well. Okay, next up will be the Nasdaq 100. So the Nasdaq 100 hit our first resistance at 21,400 and staged that pullback due to the negative spillover impact from the Moody's ratings downgrade of US sovereign debt. So now it's actually playing around with our first support level at the 21,180 level. So no change, still using the 20,900 as my short-term pivotal support level. So as long as this minor pullback didn't fall below 20,900 short-term pivotal support, which is so the lower limit of this minor ascending channel that I drew from the low of 22nd of April, we will still maintain that intraday trend bullish bias. Above 21,400 may see the next intermediate resistance coming in at 21,750 over here. However, if price action starts to break down below 20,900, then today's intraday trend bullish bias will be invalidated to kickstart another round of minor corrective decline sequence in the first step, exposing the next support level at 20,690. Below 20,690 sees the key 200-day moving average coming in, acting as a support level at 20,390. 90 next. So that's for Nasdaq 100. All right, now let us now visit the commodities asset classes, starting with the gold XAU/USD. So for gold XAU/USD, what you see over here is that price action continues to shape a higher low right at the retest of that 50-day moving average over here. So right now, price action also managed to actually shape higher gap up in today's Asia session. All right, so first support level to watch will be this congestion area here, right, at 3,190. All right, 3,190 first support level to watch. So as long as it didn't surpass below 3,310 over here, 130, pardon me, 3130 in short. So as long as 3130 short-term pivotal support is not surpassed to the downside, we will still maintain that intraday trend bullish bias for another round of recovery in first step for gold XAU/USD. First resistance to watch will be at the 3,290 level, 3,300 level. All right, so this is a zone 3,291/300, which is also corresponding to the 20-day moving average, acting as a similar resistance level as well. Above 3,300, we will start to see a further potential push up to revisit the next intermediate resistance at 3,330. However, if we start to see a price breakdown below 3,130, then we may see the further extension of this corrective decline to expose the medium-term pivotal support zone at 3,086/3,056. Okay, so that's for gold XAU/USD, watching 3,130 as my short-term pivotal support to maintain the ongoing intraday trend bullish bias. Lastly will be the West Texas crude oil over here. So West Texas crude oil right now managed to actually play a test at the 62.47 short-term pivotal resistance level, but can't have a convictionally break above it. And right now, as we are speaking, it's trading down lower at 62.21, down negative 0.4%. So still no change, still maintain that intraday trend bearish bias on West Texas oil, using 62.47 as my short-term pivotal resistance level. And what you could see is that the RSI also shaped a bearish reaction of its parallel, okay, from its parallel descending trend line as well. Okay, you can see over here. Okay, there's this bearish reaction of this descending trend line, so indicating the lack of upside momentum, or put in a way that downside momentum may start to resurface on the West Texas oil, at least on the short-term basis. 62.47 short-term pivotal resistance, maintain that intraday trend bearish bias. First support level to watch 60.35. A breakdown below it may expose 58 figure next. However, if we start to see an hourly close above and a breakout above 62.47, that would invalidate today's intraday trend bearish bias to see another round of choppy corrective rebound sequence unfolding, retesting 63.88, which correspond to the 50-day moving average, I think as a similar resistance as well. Only a breakout above 63.88 may see the further extension of this corrective rebound, exposing the next near-term resistance level at 65.40, which is the minor swing high of 23rd of April. All right, so that sum up the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? All right, so for today, key economic data to look out for over here is during the start of the European session, there will no tail one data, because this core inflation rate is the finalized rate, so that shouldn't be a big surprise given that the flash rate has already been released about a week and a half ago. So as we kickstart the US session, or 1 hour before the start of the US session, we have a slew of Federal Reserve officials speaking. 8:30 p.m. US Fed Bostic will be speaking. 8:45 p.m. US Federal Reserve officials Jefferson. At the same time, Fed Williams. All right, at both at 8:45 p.m. And one tier one economic data to take note of will be at 10 p.m. the Conference Board leading economic index data, where market participants expecting a further decline to negative 0.8% from a one-on-one basis from the previous month of March of negative 0.7%. And we continues towards the US session. heading at 1:15 a.m. Singapore time Tuesday and 1:30 a.m. Singapore time. So there's another Federal Reserve official two Federal Reserve officials speaking, Fed Logan and Fed Kaskagri. So it seems to us that today's will be more of a Fed speak day because we have a slew of different Federal Reserve officials speaking. Right, and at 9:15 a.m. tomorrow, before the start of daily dose, we have the 1-year loan prime rate and the 5-year loan prime rate from China. So very likely this will be reduced because of last week the China Central Bank PBOC reduced the 7-day repo rate and as well as the reserve requirements ratio of major commercial banks in China. So market is expecting a 10 basis point reduction to 3% for the 1 year and another 10 basis point reduction on the 5-year to 3.5% from 3.6%. Then at 12:30 p.m. we have the RBA interest rate decision, where market expecting it for you to reduce from 4.1% to 3.85%. So we'll touch more about that tomorrow in tomorrow's Daily Dose of Market Insights. So with that, ends today's Daily Dose of Market Insights. I'm Kelvin here signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.